Hi everybody and welcome to Netwealth's monthly webinar. Today we have Michelle Baltazar here from Financial Standard to talk about the top 10 learnings from Silicon Valley FinTech players. Before we get started, we'll just run through the usual housekeeping. The webinar will be recorded, so you'll receive the slides after the webinar. If you have any questions during the course of the webinar, feel free to enter them into the questions box. I will try to get to as many as possible at the end of the webinar. If you're posting to social, please use the hash NetwealthInvest or tweet at NetwealthInvest. And for your CPD points, please complete the questionnaire that we send to you, and we'll send you your CPD points. Today's speaker is Michelle Baltazar from Financial Standard. Michelle is an award-winning journalist, author and publisher specialising in financial services and community affairs. She is the Director of Media at Financial Standard and a leading industry publication for financial advisors, fund managers and superannuation executives. Welcome, Michelle. We're glad to have you here.
Thank you, Helen. Good morning, everyone, and again, thanks, Helen, for that generous introduction. Thank you to Netwealth for inviting me to present some of my key learnings from the study tour that I attended in early May. And of course, a big thank you to all of you who have taken the time out of your busy schedule to sign up to this webinar. I am by no means a FinTech expert, but I hope that in the next 40 minutes or so, I'm able to share with you at least some of the knowledge I learned and the excitement that I experienced when I came face-to-face with individuals who are ahead of the curve in terms of how they apply new technology to their business and even in the way they look at the world. My presentation is titled Top 10 Learnings from Silicon Valley FinTech Players. Yes, it is a listicle, and it is by no means comprehensive. But just in case you think that I've drank the FinTech Kool-Aid, you're wrong. I'm actually a tech skeptic, and that's good and bad. What Helen didn't mention earlier was that early in my career, I worked as a journalist in London covering tech stocks and telecom stocks. And I interviewed a guy who, during the interviews, showed me this electronic box that had a small screen on it. This was in the late 1990s, and the iPod was yet to be invented. He said to me, Michelle, you do know that one day there will be a platform on the internet where everyone can watch videos and it's going to be free. They will use this. And then he showed me again the box that looked like a Game Boy. And I said to him, you're crazy. First of all, the resolution is really crap. It takes too long to download. And I can tell you now that nobody will want to watch anything on a small screen. That all made sense at the time. But as we all now know, YouTube is one of the most viewed platforms on the internet, and the guy that I thought was a loony is probably now sipping pina colada in the Bahamas. I guess my point here is that you can be skeptical like I was, or be a little bit more open-minded. And this was an incredibly important journey for me to be with 50 other delegates, a mix of financial advisors and fund managers, trying to peer into the future, if you like, and go to Silicon Valley. I felt a little bit of a fraud when I think about the years that I talk about technology and Silicon Valley and FinTech, but the fact that I've never actually been to Googleplex or been to San Francisco, it just felt like the puzzle wasn't complete. And being there, being immersed in that environment really gave me good insights. And I'd like to share that with you today. So before I boarded the plane, this was the question I had in mind, and I wanted to have the answer by the time I got back to Australia. How can you benefit from the latest developments in FinTech? I'm assuming that everyone who's listening in know what FinTech is, but it's almost like a throwaway terminology. When I ask someone, well, what is FinTech? It's finance technology. But what does that actually mean? I found a really good description that I'd like to share with you, and it's this. FinTech companies comprise of three main developments. So there are three. First, the application of distributed ledger or blockchain technology in finance. Second, it's the automation in the provision of financial advice or robo-advice. And third, it's the loan-based or capital raising platforms that directly connect issuers and investors, i.e. you're effectively disintermediating the traditional role of banks to include crowdfunding platforms and peer-to-peer lending. So that's what we're talking about when we talk about FinTech, the blockchain, robo-advice, and loan-based or capital raising platforms. Which takes me to my first learning. Understand blockchain technology. So my first two tips are all about blockchain and Bitcoin, and I will explain that to you. I have listened to presenters who talk about blockchain. I have read articles on blockchain, and I hope I'm not alone in saying that I still just didn't understand it. So before the study tour, I go, yes, it's going to be the next big thing, but I wasn't convinced. But when I got to the study tour and I started talking to a few people about it, and especially this guy, I met this Aussie guy, Michael Dunworth, who started his own Bitcoin startup. And it suddenly made sense to me that it's not actually about what I know and what my personal experience is. It's actually about this industry trend that is already happening somewhere else in the world, and the numbers are substantial. So for me, I have never used Bitcoin before. I don't know anything about digital currency. But if it's something that you would like the stats or research around this, I will share my contact details later. But it's something like the global payments industry is $2 trillion. So that's the size of the superannuation and financial services market right now. And we're barely scratching the surface where there's 20 billion of that where Bitcoin and blockchain is already being used. Now, I know that I'm confusing the terms, and I feel that's okay because even the delegates at the event who are experts in their field were like, oh, what is it really? The definition of a blockchain is this, and I've already mentioned it earlier. It is a ledger, but what's interesting about it is that it can record transactions between two parties efficiently and in a verifiable and permanent way. When I say that, I still feel like, God, that's boring. You know, who wants to hear about blockchain? But then someone explained to me that one of the applications of blockchain at the moment is how it can disrupt the real estate market. For example, in Sweden, if you think about all the parties involved in buying property, you have the buyer, the seller, the conveyancer, you have the land titles office, then you have the bank organizing the loan, and then you have all these other third-party providers that pretty much cumulatively adds to the hidden cost of buying or investing in property. And right now in Sweden, they're trialing this idea of cutting out some of those third-party providers, whether it's the land titles office or the real estate agent, and really just making that transaction seamless. And you can do that now through the blockchain technology and using Bitcoin as a currency. So what is the environment like here in Australia? This was a survey done by Transaction Network Services last year. And again, it feels like we're all on the same boat where adoption is still slow. So you can see there that 18% of all the adults who participated in this survey use Bitcoin. So 18%, it depends on your perspective. You can say that's too low, but at the same time, the trend is going up. So it's all about really thinking as a business running your practice. Can you afford to ignore this platform, this transactions platform that's already being used by 1 in 5 Australians? Another thing as well is that I just had this perception before I went to the study tour that Bitcoin is a digital currency. That's all there is to it. And I even imagine, you know, guys who have nothing else better to do with their lives but stare in front of a computer and play games. And I know I feel terrible thinking that way, but that was my perception, and I don't think I'm alone in that. But there is this view now that I have after the study tour that it's more than just a currency. And I've listed a few applications of it, including how you can verify data. I talked about the real estate market, so that's the smart contracts. Some portfolio managers are now using Bitcoin as a way to hedge. But the big one, I feel, after going to the study tour is that Bitcoin is now a payment infrastructure. So going back to Michael Dunworth, he's now started a new startup business that allows people from China to do business in the US using Bitcoins. Why is that important? Everyone knows that e-commerce is huge in the US, China, India, and in the past for a Chinese business to exchange transactions in the US would take 3 days. And with Michael Dunworth's business, that gets crunched to an hour or less. And ultimately, what they're saying is that this can now happen in real time. So I just want to pause there and ask you, how will the world look like when currency exchange is no longer as cumbersome as it is today? I'm sure you've all traveled to remote places, say in Italy. You know, you go to a beautiful Baroque town, but they don't accept your credit card as a form of payment. And you think, what do you mean? You know, everyone uses credit cards. But they go, yes, no, we only accept euro. And 10 years from now, that is going to be the situation where people are going to transact online using digital currency. So this was an interesting one. Tip number 3, artificial intelligence will get smarter. The study tour went over a 4-day period, and the first session was about artificial intelligence. And again, before I went, you know, you have to admit it, we all have this irrational idea that robots will take over the world and they're designed to dominate, to replace humans. In the same way that I feel Jaws as a movie really changed our perception around sharks and what they do. And it's just a really scary prospect to relinquish control over to robots. And I thought, yeah, you know, it's funny, but after attending this session and meeting this guy, David Itzkovitz from Sanlam, Sanlam is a Boston-based fund manager, and they're already trialing investment portfolios based on, if you like, algorithms, purely on algorithms. I've changed my view around this. And essentially, it's really doing a deep dive on what do we mean by artificial intelligence. And there are 2 types. what they call sentient AI, which is when AI starts to behave like humans in terms of thinking and processing ideas, to non-sentient AI. And before you think, oh, you know, we're 5 years or 10 years away from sentient AI, the takeaway from the session that I attended is that we are really at the very, very beginning of where AI is. It's so rudimentary. And yet, even at this very startup level, the impact on investing is already quite phenomenal. For example, Sanlam Global is running this portfolio, and naturally they just launched it late last year, but they back tested it. So imagine if you gave a client this Sanlam portfolio back in 2008. Based on their back testing, this portfolio would have returned 24% against its benchmark's loss of 22%. That's a huge difference. And the only difference there is the way the portfolio was run. One was run by the sophisticated algorithms that already exist today. What about consistency? Well, they back-tested it again to over a 10-year period to 2016, and this AI-run portfolio returned 281%, versus its benchmark's 74%. So it was almost 4 times as effective as a traditionally run portfolio. You think about the volatility. The volatility of an AI-run portfolio was 10.41 versus its benchmark, which was 10.4. Now that is just in one asset class. If you multiply that across several asset classes, I just want you to pause and think, what does that mean for your client? And what does that mean when you present yourself as a financial advisor adding value? I mean, and again, just going back to the takeaway from the study tour, we are just at the beginning of this. And I remember, I think I overheard Matt from Netwealth saying, at the moment, we just have dumb AI. Imagine if we're already working with smart AI. Now, under artificial intelligence, there's a subcategory called Roboadvice. Now, I'm pretty sure everyone listening in knows about Roboadvice, and you probably have your own opinion about Roboadvice. And we probably would all agree that robo-advice, as it is loosely defined in the market, is fundamentally incorrect. And it's actually a misnomer. And if there's anything I'm going to do as part of the media, is to almost take the word robo-advice away from the terms that we use to talk about financial advice. Because I remember talking to my friends who are not in financial services, and I said, guys, what do you think about robo-advice? And one said, that sounds really creepy, Michelle. I don't want anything to do with a financial planner giving me robo-advice. And another person who is an editor at a government agency said, Michelle, that rhymes with yobo advice. So I'm not even going to go near that either. But for the most part, what I got from the tour, based on the presentations of a couple of, quote unquote, robo-advice platforms, GemStep and Personal Capital, is that there have been a lot of mistakes made as the business model was being developed. It wasn't in terms of scaling it up as a profitable business, there were a lot of missteps. What I mean by that was that, just using theoretical numbers, it would cost, say, $10,000 to convert a client to robo-advice, and Meanwhile, you're only yielding X thousand of dollars over a period of time. So it was a loss-making enterprise. But that was the story 5 years ago. There's now a shift where Roboadvice is actually evolving or morphing into integrated financial advice. And if I can just draw your attention to the slide, this is from Personal Capital, under Expectations Tomorrow. What they've done is that you can go online, they offer finance tools, analytics tools, and guess what? They're now also offering financial planning. So that's a new component right there. On the web, there are a lot of micro savings apps. There are a lot of finance apps, but it's almost like they're half-baked models. But what you're going to see in the next 10 years or so is that it will become a viable advice model where, as you can see from that slide, the financial planning aspect and the investment management aspect will be advisor assisted, and it will be fee-based. So again, the tools are just there to almost lead the client, make them a little bit more confident about the virtues of professional financial planning. And I think that's really exciting, especially because I know that a couple of delegates were really interested in looking at how they can transform their practice based on this business model. But just a quick point on the advisor-assisted part of that chart. Personal Capital said that they had very strict criteria around who they would work with. So for example, the financial advisors that they would work with are certified financial planners. So they don't train them from other industries. These are organic financial planners already working in the industry. I just want to spend a minute on this case study by GemStep. You might need to ask yourself, well, you know, what is the return on my investment? What do I get out of implementing this platform? Here they had a sample of 1,788 visitors. And you can quickly look there that yes, maybe out of the 1,700, they only got the email addresses of 100. But over a short period of time, and this is all happening online, so it's not like there's a active involvement there, 10 of those 100 registrations converted to becoming clients. So then you have to ask yourself, will that be worth my while? And if the answer is yes, the software platforms, the software solutions are already there and they exist. More importantly, you look at the conversion rate. The conversion rate online climbs to 24% for clients with over 600,000 US dollars in assets. And this is the sweet spot, isn't it, to cater clients or investors who have around $1 million in investable assets. All right, this is tip number 5, data versus knowledge versus wisdom. Just when you think that your life is going to get better thanks to technology, I'm sorry to say it just got harder. Harder and easier at the same time. What I mean by that is that Snehal Antani, who is the CEO of Splunk, presented to us this idea of how are retail companies in the US using big data analytics now. And probably the term that really stuck to me is the feedback loop. So all you really want is that when you're working with prospective clients or existing clients, what does the feedback loop look like? Do you get the latest information from them Do you get it at the right time? These are all things that used to be labor intensive. Even in media, for example, it's all about focus groups, about the surveys. Well, you don't even have to do that. There are analytics solutions, there are software out there that would help you manage all this data that you've been collecting over time. It's actually scary how much data is actually in our mobile phones. And those are the kind of analytics that in the US, they're really using for alerts or for triggers on people walking into a shop and what they're most likely to buy or not. You're probably thinking, yes, I know all this, Michelle. You know, Vodafone used to text me when I would pass by Meijer to say, hey, Michelle, do you need to buy some new clothes or something? The concept hasn't changed. The concept is not new. But the ability to dig deeper and turn all the random data from different sources, social media, your utility bill, and so on, it really is just amazing how everyone in the Silicon Valley, if you like, you have all these engineers, professionals who day in, day out, all they do is try to spend time to work out what is the quickest and best way to get insight from big data. So expect that a lot of companies will now have what they call data journalists. And the beauty of that is that, as Snehal Antani said from Splunk, it's okay that you have data, that's all well and good. But if you can't tell a story around it, then it's pretty pointless. So the question I'd like to pose to you is that as a practice, do you feel that you should be the data journalist? Do you feel you should be the storyteller who will try to analyze all this data that you're collecting from your client? Or you may need to consider that at some point there will be that dedicated staff in your practice that spends time just purely on looking at the data and converting that into a story that can help you work better with your clients or grow your business. Tip number 6, follow the digital breadcrumbs. So this is quite interesting. Social media, I'm pretty sure all of you have either a Twitter account or a Facebook account or an Instagram account. And what happened at the study tour was Franklin Templeton hosted a panel where 4 social media experts pretty much gave their thoughts and shared insights. One panelist even did an advisor case study on how you can use social media. And the key takeaway for me is that you don't have to be everywhere in social media, or you don't have to be relevant to the entire universe. You just have to be relevant to a small segment of people who are in social media who probably do want to know more about financial planning or looking at investments. So the next 2 tips will be about the stats, the latest stats on social media. For example, I wrote there, find the nomads and hunters. And what I mean by that is that there was a study that Accenture did. They surveyed 33,000 financial services consumers. 33,000. So this is not one of those run-of-the-mill research. This was serious data. And what they found was that there are 3 types of personalities when it comes to social media. One is what they call the nomads. And this, in Australia, 30% of the population are nomads. I'll say that again. 30% of the population are fall into the category of nomads. And what they is that they are the early adapters of finance technology and the type to use Google or Amazon for banking. That's actually a huge chunk of the population that are quite comfortable to be in the tech space. Then you have on top of that what they call hunters. Hunters are those who want the best of both worlds. They are happy to go online to get financial information, but they would only adopt new technology at the right price. And unlike the nomads, they still prefer traditional modes of getting financial advice, i.e. face-to-face or through word of mouth recommendation from your clients, for example. But if we break down the numbers or we add up the numbers, there's 55% of the population right now in Australia who are just begging for information on finance. So that's one, that's the market that you need to look at when you're trying to review your social media strategy. And I talk about the digital breadcrumbs because I think the perception is if you're on social media, you're the one posting, tweeting, retweeting. But really, it's also about gathering information that you might not otherwise have. In the past, there's just not enough content on social media to really get a good understanding of anyone who posts on there. But we are now in that space where even Facebook would do analytics on predictive analytics based on what people post. So we've talked about the nomads, the hunters, and there's also this view before I went to the study tour that social media is all about the millennials. Actually, that's wrong. It's the under 40 high net wealth investors who are your key target, who would make like such a prime target as clients when you're on social media because they are power users of social. When I saw the stats, I was just like totally astounded by this. Who knew that that on any given day there are 9.9 billion Snapchat videos that people are watching? It was very hard for me to get my head wrapped around that because I myself, I don't use Snapchat. You know, it seemed too cute. The virtual augmentation of the flowers or the rabbit, and I'm sure you've seen a Snapchat post that at some point go through on Facebook or on Twitter. But coming back to my point about who are the power users of social, it's the under 40. Their purchasing power is on the uptrend. For example, 41%, this is again another survey that was presented at the study tour, 41% cite social as important for getting information. That's a huge number. Out of that 41%, you can see the other two stats there. They're not too far from the 40% figure. So you're really looking at 1 in 3 of the under 40 high net worth investors who are going to transact via social media, who will engage with fund managers. I do feel this is more of a US story right now than it is an Australian story. But in 5 years' time, in 10 years' time, I doubt that we would be too far behind these kind of stats. This is probably one of the most surprising outcome out of attending the study tour. Having covered financial services media for the past decade or so, a lot of the industry debate focuses around internal competition. You know, what are the big banks doing? What are the boutiques doing? What are the super funds doing? The scary part of that conversation is that one stakeholder is missing, and that is all these tech giants who are finding ways to tap into the market, and they're doing that today. So I was very surprised that Snapchat, which I've always seen as a, as a silly social media platform, is looking at quote unquote robo-advice technology. How do you even do that? How would that translate in a 10-second video format, or how would that get around compliance and regulation? I do feel that a lot of the conversation right now on innovation in financial services is hampered by, it's going to be a compliance headache, it's going to be a regulatory headache. Guess what? Snapchat, Amazon, they don't even look at that. They're looking at the same problems that we all encounter on a day-to-day basis from a different angle, and regulation, which is a priority in our industry, is not one of them. Cybersecurity. I know that we all know, yes, there's malware, there's spam. We all know this, but what I got from the study tour was how dangerous it is to be ignorant about some of the technicalities around cybersecurity threats. I met this guy, his name is Brian Lee. He looked like a sumo wrestler, and he used to work for NASA before he became before he started working at Palo Alto as one of their cybersecurity analysts. And he just said, Michelle, there is a lot of evil out there, which I thought was quite funny to hear from, as a cybersecurity analyst. But then he went through the numbers, the research, which I'm happy to share with you after this webinar, where the cyber crime industry is now a 450 million sector in the US alone, for example. A cyber criminal gets paid more or makes more money than a doctor or an engineer. Imagine that in the good old days, you're in the middle of Martin Place if you live in Sydney, and there are pickpockets around you. And you can see them coming, and you can see them, trying to get your wallet or grabbing your bag. We now live in a world where there are virtual pickpockets. And Brian said one of his top tips was, a hacker won't try to attack your business, your enterprise, because there are a lot of very sophisticated enterprise software out there. However, the way they'll go around that is to hack into your cousin's Gmail account, because your cousin doesn't know anything about malware. And when your cousin emails you through your Gmail account and you access that through your computer at work, then that same dangerous malware gets to worm its way into the business without anybody knowing. In Australia, I don't think we have seen that. It's not really widely reported when there's a major cyber threat attack. But certainly 2 weeks ago, apparently a malware attacked a major hospital, and it meant that surgeries couldn't be done because all the bookings were lost. Nobody knew what kind of medicine they'd be able to give to the patients because the data's been corrupted. And the takeaway for me is that at any given point, there will be a major crisis, and the best way to prepare yourself for that is to educate yourself and to understand that cybersecurity is not a problem for the IT team, but it is a problem for the entire practice. So I think that's my 40 minutes. I appreciate your time, and I do hope you got a value from what I shared with you. The final tip is technocracy is the new aristocracy. And this is really just summarizing everything that I've talked about, where the wealth of nations in the future will not be defined by who is rich or not today, but it will be who has access to the best technology and know how to use it to their advantage. With that, thank you very much, and I'm happy to take any questions if there are any.
Yep, we do have a few questions. First of all, I just wanted to ask, you went to Silicon Valley with a group of financial advisors and they heard the same presentations you heard. What were their takeouts from the trip?
Yeah, so one of the feedback that I got was that one of the advisors said, my goodness, Michelle, I didn't know how ignorant I was of all these trends happening, and to me it was all just sci-fi. But in reality, after attending the study tour, all his peers in the US are already using all these different solutions, very cyber threat savvy. And so it was a common theme. Delegates realizing what they didn't know and pretty much trying to understand that the world in a decade's time is just going to be different to where we are today.
So a lot of the concepts seem like something out of a science fiction novel. What do you think the time frame for change will be?
Okay, the timetable. This was funny because Snehal Antani, again, the big data guru from Splunk, someone asked, how long is it going to take before we're going to be totally, all the systems are going to be obsolete? And he said, 2 years. You've got 2 years. So there's, again, this different timetable. In Silicon Valley, long term is 6 months. So you need to get yourself into that mentality of, as a prudent business owner, you think of life in 1 year, 2 year, 5 year, 30-year periods. Meanwhile, the technology specialists who are redefining the world that we live in think about timetables in 1 month, 6 month, 12-month periods. All right, so I'll just have a look at these questions.
I forgot about CPs.
Hi, Simon. Thanks for listening in. Your question was, it would be interesting to know how capable AI is in the asset allocation space. Great question. And Sanlam already has an answer to this. What they've done, the short answer is, it is going to be extremely capable, like crazy capable would be the technical term for it. But what I mean by that is that Sanlam's portfolio, they have 600 different algorithms, let's call them robo-analysts, looking at equities. If we just focus on Aussie equities, 600 analysts at any given time looking at what's happening with the top 100 Aussie equities in the country. Then it would make a buy, sell, hold recommendation, and that will go to what they would call the top analyst, which is again a robo-analyst. That robo-analyst will look at risk-return profile within Australian equities, but also compare that with the risk-return investments across other asset classes, international equities, property, etc. And then at the final end of that step is actually an asset allocator. So to answer your question, it's going to be extremely capable. They're already, Sanlam is already using it, and you can tell that when they back-tested portfolios based on the asset allocation strategies they've implemented, that some of the returns are 4 times better. And I'm sure everyone who's listening in have read the piece about BlackRock and how BlackRock is moving into this space. And with that muscle, I imagine that they would do even more around how AI can help with asset allocation. A second question, which is your follow-up question, let me just open that. How efficient it would be to analyze market sentiment and take advantage of that? Very easy. And what I mean by that is that there are 2 big trends. One is on AI and just having this, techno muscle, if you like, to analyze the market 24/7. So while you're sleeping, this robo-analyst is working through market sentiment across multiple time zones. But on top of that, there is this new trend called the study of thick data. And thick data looks at the irrational side of investing, whether it's market sentiment on the plus side or the downside. That's all getting thrown into the same pot to provide a better investment outcome. All right. I have heard that Bitcoin will be the basis of a global identity system for people and businesses, feeling a fundamental need of many industries beyond finance. That would put Bitcoin at the center of global business infrastructure. Is that being talked about? Short answer is yes. So the way Michael Dunworth from Wire described it is that blockchain technology and the rise of cryptocurrencies is what is to 2017 what the internet was in the late 90s or early 2000. If I can just explain this another way, there's what they call two types of technology: foundational technology and disruptive technology. Disruptive technology is when you attack a traditional model with a lower cost solution, and so you're able to overtake the incumbent quickly. You know, low cost, faster service. That's the definition of disruptive technology. But blockchain and Bitcoin is not disruptive technology. It's what they call foundational technology. Foundational technology is technology with the potential to create new foundations for global economic and social systems. Did everyone talk about it? No. It was a handful of people there, including Michael, who really realized the enormous potential of Bitcoin to change the world as we see it. And I think the only reason it wasn't being talked about is that it's still at this time very little understood. I hope that answers your question. How are we for time?
Yeah, we've still got a few more minutes. A couple more questions.
So Tony, that was your question on Bitcoin. I hope that helped, and happy to exchange email addresses if you want me to share my research with you. Lars asked, how do they get around the regulation? As planners, we are hamstrung by it all. I could do so much more for my clients, but can't do due to those regulations. Lars, that is an excellent question, and I think you heard me talk about how the industry, anytime we talk about innovation, we always think about regulation and how that's going to hamper what we're trying to do, or, you know, can we really innovate because we've got compliance that we need to address. So something that will be talked about in the next few years is what they call RegTech, or regulation tech. And it's, again, just a subcategory of FinTech. My short answer is that ASIC at the moment just set up an innovation hub. They set that up 3 years ago. So the culture is changing around what do we do as a regulator to enable companies to succeed without making regulation a constraint. So probably an example here more recently is Spaceship, and how it's doing all these new things around the superannuation. Regulation was never an issue that they would have looked at the start. It was more around what is the gap in the market, and we're going to do it our way, and it's a fresh template. So hopefully that answers your question, Lars. It's all about RegTech. Sabina, won't government interference and regulation cause hurdles for Bitcoin? Short answer is absolutely. For those of you who have read, who have started researching Bitcoin, It actually started as a currency for drug lords, you know, so we're now looking at the very shady, dark economy that exists out there. However, the government has come on board. Everyone's realized that this is not going to go away. What I mean by that is that even just a few months ago, the Australian government has changed the rules around double taxation of Bitcoin. So in the past, you buy something online with Bitcoin, you get charged on the way to buying it, and then there's another tax charged on top of that by the e-commerce supplier. But starting this year, that will go away and you will no longer be double taxed. So the message for me here is that the government is starting to understand that they need to get on board and adopt to all these tech trends that is reshaping financial services.
Thank you, Michelle. I think that's all we have time for today. Thank you for coming in and sharing all your learning. That was great. Thank you for everybody that logged in today. We hope you join us at the next webinar. As I mentioned earlier, we will send you a recording of the slide, and if you complete the questionnaire, you'll receive your CPD points. Thanks, everyone.